Ni hao ma. G'day, mate. How are ya? How's your mum? Morning, everybody. It's Wednesday. Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. Today, we'll conduct technical and fundamental analysis of dollar pairs, yen pairs, cryptocurrencies, commodities like gold and oil. We can talk about global money flow and anything that you want to talk about above and beyond that. Thank you for subscribing. Thank you for your positive energy. Oh, and by the way, if you're a spammer, we're not interested in buying your signal service because we are intelligent human beings that make our own decisions. And if you're a troll, check your negativity at the door. Simple enough. Let me remind you that trading is risky. It is not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but it's a good idea to stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald. I am a currency trader. Before that, I was a venture capitalist. Before that, I worked in the nonprofit world. And before that, I worked at NASA. Before that, I think I had a paper route. Cool. Actually, I had two paper routes. I was a baller, and I worked evenings on the weekends. Not bad for like a 13-year-old. Anyways. So, as someone that's been doing Forex for 20 years, I'm happy to share my learning experience. Remember, I'm self-taught. There were no books on Forex. There were no training courses on Forex. YouTube wasn't invented yet. So I actually didn't know a Forex trader, didn't know what one looked like. So I just kind of made it up. It was pretty interesting. Amazon.com was a tiny little startup that sold books online. They didn't sell anything else. Amazon didn't have anything. I went to Barnes & Noble, which was the big place where you got books, and they didn't have anything on Forex. So I even went to the Stanford University, not the library, but the bookstore, to see like what did the Stanford kids learn when they got their MBAs in finance? What did they learn about Forex and what textbooks? And there wasn't a specific book on Forex, so there was nothing. So it was on my own, and I had to go figure it out. Okay, what does that tell you? I have tenacity and hustle. Not a perfect trader, not even the greatest trader, but I have tenacity and hustle, and I'm not afraid of blood, sweat, and tears for years. Okay, another example of that is going to Harvard and earning 2 degrees in your 40s while raising children and running a business. What does that prove? That I'm the smartest one in the room? No, but once again, I have tenacity. I did graduate with a A-, a 3.86 GPA, which ain't bad. Tough classes. So anyways, I brought some hustle to this game, and because of that, I've made a few mistakes, but I've learned a lot along the way and have a few gems that I'm willing to share. So thank you for being part of this community. I hope it helps, and if it does, please like. Please subscribe. Please leave comments on videos. Please visit tradersway.com and open up a demo account because I think you should. You want my advice? Maybe you're here for some advice. You need a broker that's trustworthy and one that has earned your loyalty and respect. Don't go for the cheapest. Don't choose a broker because of a slick ad. Oh, look, we sponsor a racing team. Pfft. Who cares? Right? So anyways, yeah. Wait, you sponsor a soccer team? Oh, great. So that means what? You trade against your clients, make a whole bunch of money, and then sponsor a soccer team? That doesn't sound good to me. So anyways, go with a broker that has earned your loyalty and respect. Traders Way has earned my loyalty and respect. Maybe they can earn yours. Give them a shot. Tradersway.com. Do it now. Let's go. What are you waiting for? The rest of your life is here. The rest of your life is now. Okay. Sorry, I got ghee stuck in my teeth. There we go. Actually, it was collagen. Not bones stuck between my teeth. Bone marrow. All right, let's do the poll. Let's see what you got going on in your mind. Commodity currencies are what's on your mind. So Aussie, CAD, Kiwi. Kiwi is down. CAD is down. Aussie is stabilizing. Yen is down. Dollar's more down. Okay, so you're probably looking at Aussie USD. Now, the cool thing is, last night in the day trading group, that was one of them we set up. We actually went from this 4-hour chart all the way down into a 5-minute chart to talk about how to scalp your way in. Okay. Wondering what time frame. It was a 5-minute, wasn't it? Maybe it was a 15-minute. Yeah, I think it was a 15-minute. So, oh, where's my drawing tool? Hang on. Let me get my EpiPen. I believe this was Johnny's trade. Okay. Santiago wants to know if it's risk on or risk off. Well, it's been very much risk on today. Okay. So anyway, so last night we had a conversation around this setup on Aussie dollar long. And just to kind of set the context here, it has been down for a few days. Okay. Down, 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 down. So last night we were talking about up. Okay. And so Johnny's question, oh, I got to go back to a 15-minute. Okay, because I was just talking about how to scalp into a position long. And he's like, well, dude, shouldn't we at least be above the 55? Johnny, that was the question, right? I just want to make sure I got the right time frame, right currency. Patrick Note wants to know why the euro is strong. Well, everybody's buying it. Okay, so one of the things I talked about, because I'm pretty sure that's Johnny's trade, I'm like, it's not the 55 that matters. The 55 is sort of played out. That's not the key. The key to the 55 is saying that a bottom is coming. And if you look a little bit left, you can see that it's already printed. So I said, well, really what you're looking for, Johnny, is the crossover and the retracement back into the 21 as support instead of 55 as resistance. So he's like, shouldn't you break the 55 before you go long? And I'm like, no, 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 no. What you should do is wait for the 21 to be supportive, okay? Which is, it's the same thing but different. And the reason it's the same thing but different is my way has a little bit less risk. And there you go, Oscar Mike. Cool. Should have been in the day trading group. Okay. Down, 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 pa-chow. Yeah, it's I think Canadians say that from time to time. The one thing about Canadians is, you know, they're funny. Canadians are funny. It comes from a lightheartedness or something. Okay. Cool. So anyways, that happened. Same but different. Is that right, Edux? Some countries, they say, same, same. It's so similar that it's same. It's double the similarity of a regular similarity. Yeah, it's the same, only different. Yeah, I got you. Is this like gang dang? Oh, it's same. Same. Yeah. It's same, only different. It's been a long time since I've had good Thai food. I need to go for some Thai, man. That's what I'm telling. But I live in Georgia. It's a real shame because in Georgia, I don't know, especially I don't even live in Atlanta, so people are a little more suburbia, a little more rural. So when a Thai restaurant or an Indian restaurant shows up, they change the recipe to be more local, so more people will eat there because oh, too much curry. Oh, that's too spicy. Oh, and all of a sudden, you know, it's just not good Thai and it's just not good Indian. But it's local. It's similar. It's same, only different. I'm like, no, man, I want some good Indian food and some good Thai food, man. Oh, I'm ready, man. I'm ready to see the world. Richard says, I learned from the strategy you teach in the course, and I scalped Euro Yen all yesterday, adding at every retracement, and I made 150 pips. Yeah, good job. Bravo, bravissimo. Yeah. Cool. All right, so that's that. That's how you do it. That's how you do it, everybody. Let's go over to other Aussie pairs and take a look. This one I have as rangy, and it's fallen all the way to the bottom of the range and then pop back up into the top of the range. Hoorah! Okay. Bum, 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 da, 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 da. Hang on, let me change this. Okay. So I'm eyeballing this for short, but not yet. Not yet, bro. Bro. Not yet, bro. Okay. So cool. That's great. I want some up so I can sell it. So I'm just kind of waiting my turn. Aussie dollar we already did. And then this one's a good one too. Okay. And it's just happening now. You see it kicking off the 4-hour 21. Okay. That's great. Okay, what do you think? That's pretty, isn't it? Okay. Now, one of the things I'm noticing is happening in the day trading group, because we meet twice a day, every day, twice a day, Sunday, Monday, Tuesday, Saturday, Monday, Friday. Friday, that is speaking English, Monday, Tuesday, Friday, Tuesday, Wednesday. Okay, we meet every day, and I've noticed that people are coming full circle all the way from where they started learning how to trade to the more advanced stuff. And now they're coming back and they're like, dude, these moving averages. I'm like, I know, this is where we started, right? That's the basis of the book. You come full circle from simplicity to complexity and now back to simplicity. I think that's really good news, by the way. Because what'll happen is you can see or anticipate the complexity, but you return to and trade the simplicity of the complexity, versus before you didn't see the big picture. So all you could see is the simple picture, right? You couldn't see the complexity, right? And then you get knee deep in the complexity and you start to understand this and you start to understand that. And you're like, this is complicated and that is complicated. And wow, but they all fit together and there's definitely something here. And then you start putting together rules of thumb to deal with the complexity and all that kind of stuff, visual and mental models and all that kind of stuff. And then all of a sudden you rotate back and you see the simplicity at a whole different level though. Instead of looking up at simplicity, kind of looking down at it and going, oh, I see it. Right? Oh, Peter, you've done that about 5 times? Yeah. Okay. Boom, 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 boom. Yeah. Well, I think it's evolutionary though, isn't it? I mean, somehow that needs to happen where, again, what you're looking at on your chart, you understand the complexity. You understand the complexity of the issues. Okay? And you don't need to look at it. You just understand it. You see it with your mind and you deal with it mentally. And then with your chart, you trade the simplicity, right? You're riding the complexity. Yeah, Darko. Yeah. Happened. Well, but Darko, the European trading group missed the Sunday trade that we crushed, that you crushed. Okay. Hey man, don't cry over a 400 pip trade that you nailed, right? But by the time the Europeans logged in, it was already over. So, you know, you got Sunday, they missed it. If you couldn't trade Europe, then you missed this one. But everybody gets a turn at the dance, right? Are you late? You're never too late. You're never too late. So like this one, first of all, back out and check to see where you are. Check the different time frames. Check the different templates. Okay, here's a confluence. Are you on support or not? All that kind of stuff. Yeah, I mean, you're a little late, of course. But when you're scalping, there's no real sense of time. And remember, there's no fundamentals anymore when you're on a 5-minute chart. So is it too late? There is no too late. There's just sell at the resistance. Okay. Now you'll see like even that move has probably already happened. Okay, we'll wait for the next one. Yeah, Richard. Yeah, Darko pulled out 400 pips on a trade. Euro Kiwi, I think. But the reason I remember it is I sold Euro Kiwi right before my day trading group meeting. Logged in. We burned through all the charts. Darko's like, hey man, I'm up 300 pips on this one. And I'm like, cool, I just sold it. By the time the meeting was over, I went back to trading and I was up 150 pips. Actually, I was up like 180 pips or something. And something, you know, late at night, something ain't right. Okay. I moved the stop and I locked in 150 pips. I went to look at my other setups. And then I hear this like literally like 8 minutes later and turned around and sure enough, it had rallied back up 30 pips and knocked me out for a 150 pip win. But we're talking about 150 pips in about 45 minutes. Okay. Yeah, Johnny got some good trades again. So Johnny was talking about USD Mexican peso and we set that one up for a short last night. Johnny short somewhere like on this move and I shorted it there. I scalped it last night. Okay. So I'm short at 21.3. I think he's at 21.4. So I'm at 21.3. Johnny's at 21.4. Okay. He played the inverse head and shoulders. I trapped it and scalped it on a 5-minute chart. Okay. Then it came down, broke through support, gave you another chance here at the European Open. Everybody's had an opportunity on this one. My stop's already at break even. As you can see, I can't lose money. Cool. So Johnny nailed that one. And he nailed the Aussie. Man, this guy's on fire. You got that one too, Mahai? You got the lower high after the double top. Yeah. So that's what we call a hammock, right? That's our hammock trade. Yep. So people in boot camp are so well trained, we even have a secret word for it. And the secret word hammock comes from a story I used to tell. I'm not going to tell it. It's too late. I'm tired. Right? It's Wednesday. I'm exhausted. It just comes from the idea of it's so common that we're trained and trained and trained and trained and trained and trained and trained so well to take this trade, we can do it in our sleep. And then if you ask, well, why do you call it a hammock? And you're like, well, just I'm not going to tell you. The idea is that we're so well trained to spot and trade these setups that we can do it in our sleep. Cool. So it looks like 4 or 5 people in the chat today say they caught that. Sweet. Cool. That's what we do. Okay. Got to get through that, and then it's all the way down here. Okay. So we got to get through the cycle level 21. Will it do it? I don't know. How would I know that? Okay. All right. Let's go back to commodities. Back to commodities. Oh, there goes. All right. Let's take a look here. Oh, look at the up arrow, the down arrow. Hey, you're welcome. Look at that. I put an up arrow there and a down arrow there. You're like, oh, but it went over for 2 hours. Okay, well, I'm sorry. But look how well it held. Cool. So anyways, that's down. So Kitty Cat should be down. Norway should be down. Interesting. That might put the stock market back up. Sweet. Okay. Gold up. Held over support. Now down and holding under resistance. Okay. Cool. So normalization, okay, which is potentially, helpful, aka risk on. Silver hit target and stopped. Once again, do you feel bad for traders that just don't know that that's the top? No, neither do I. Okay. Yeah, neither do I. Anyways, there's probably some up here. Okay, in silver. But there's definitely a top. That's definitely a warning flag. This is a maybe, and that's a warning. Cool. Right on. So if you're a bull on silver, do it. Do it. Okay. Yeah, thank you, Darko. Darko says it's taken a year for him to be able to start trading well, but he would never have been able to do it on his own in that fast. And that's the whole thing. I don't know if you're going to make more money by becoming a boot camper, but it'll probably save you a year or two or three. Okay. And that's the one thing you can't buy, right? Time. Well, maybe this case you can. So yeah, I want to go back to dollar. I guess we'll take a look at euro. Let me reset this. Okay, mark your lines, y'all. Mark your lines. Look how nicely that one held, huh? Up, 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 down, down. Oh yeah, I skipped Bitcoin. Sorry about that. Let's go back and do Bitcoin. Here should be. Okay. Okay, we were down here. Oops, let me change the color. We were down here on support. We were caught here under resistance, and then just a break, gone. There's some new legislation in the United States probably being signed today. It's not actually legislation, it's executive order, which is a little odd, but nonetheless getting done. It's just quicker, I suppose, than talking about it for 5 years. Again, the one weakness in democracy is everybody talks and talks and talks and talks and talks and talks. So every once in a while, crap has to get done, right? So anyways, executive order is one way of doing it. Trump did a lot of executive orders and the Democrats hated it. So now Biden signed an executive order. I know, cheap dig. But anyway, so I guess the market's reacting in a way where that's either good for the maturity of the industry, or what's in the executive order could be a hell of a lot worse than what it could be, like banning crypto, for example. So I don't know. So a positive move here. Or this has nothing to do with that, and it has more to do with risk on. Okay. Risk on. There's other signs, and you know, I'm playing high energy prices, right? I told you guys, when was it? A month ago? I bought EVgo, which is an electric car charging station. You know, when you go to the shopping mall and there's a place to plug in your, $120,000 Tesla at Walmart. So when you're at Walmart, when you take your $120,000 Tesla to Walmart, you have a place to charge it. Okay? Well, that's really good too if you think through this. High energy prices, high gasoline prices, more demand for alternative ways of driving without having to fill your gas tank, but you still have to fill your battery, and then there's a company, right, putting that up. So I bought that 1 month ago. And then I bought, what's it called? Chargeport on Thursday. Chargeport. I don't know the symbol. Anyways, so I bought Chargeport 3 days ago. Well, I guess now it's 5 days ago. Okay. Okay, and I'm playing this. I'm talking about risk on. The same move that you see here in Bitcoin is going to be seen in many different asset classes. Okay, so in I think it's actually 4 trading days, that stock is up 10%. In 1 month on EVGO, I'm up, I think, 50%. While the market is down 15%. The market is down 15%. So the beta is down and my alpha is up. How sweet is that? CHPT, that's right. Okay. So now, guess what? If we rotate to risk on again, this will go back up to, recovery. So we'll get rid of the negative 15, but this stuff might really benefit from risk on too. It's also my, build back better plan. Money that gets put to work is probably going to go to that infrastructure. So when you combine those two companies, I think there's about 250,000 places you can charge your Tesla. And pretty soon, your Ford F-150 pickup truck. How about that Lucid Air? The Lucid Air Premium, 1,100 horsepower. Okay. I was walking the dog today and the Porsche Taycan or whatever it's called drove by me. Brand new, nice one. It was nice. Made a little humming noise, which I don't think I liked. But anyways, I looked at it and thought, not 1,100 horsepower. But then I thought about it. It's German made. It's probably a very well-made car. Okay. So anyways, 200 chargers, 250,000. But that's going to be a 1 million and then 2 million over the next, few years. So that could be interesting. I would even anticipate ChargePoint taking over EVGO, right? And just being one big company. I don't know if the government would want that. I think they would maybe hand out individual projects to them, but nonetheless. So risk on is risk on. Okay. Risk on is risk on. I think it's a little bit early, but remember, I have high conviction for risk on by the end of the month. So maybe it's now, but maybe it's now. Maybe it's the beginning of now. Maybe it'll take a couple of weeks, but this is the first part of the new now. Hey now. Okay, so let's go back through, well, Aussie we already did. Kiwi, did we already do Kiwi? Okay, I drew a line in the sand here. Sorry. Let's go farther out and see what's up. Oh, sorry. So we're held there now. But I believe we were talking about this maybe developing into something in the near future. There's only two places to buy it. If you're a bull, you buy it low or you buy after the break. So, this idea or that idea. And that higher high would set up a higher low idea. And we're looking forward in this. So what you might notice is we have support down here, but I already have like this thing drawn here, like showing a potential. Okay. But when you're at the bottom of a range, it's likely to go to the right top of the range, then back to the bottom of the range, to the back, to the top, to the bottom, this will last forever until it breaks. Okay? And so what this is showing is we're actually talking about it down here, about the potential. Actually, we would have been talking about it sort of in here, that the potential lives within this because we're at support, but you might also be thinking more than today or this week. You might be thinking a little bit further in front. You're thinking about the next time New Zealand raises interest rates. You might be talking about seasonality on US dollar, and in the back of your mind, you're preparing for this. And now it could be consolidation. It could be inverse heads and shoulders. It could be sort of just a full-on fast reversal breakout type strategy. You don't know, but you're open-minded. You're not predicting it, but if it happens, you're ready, willing, and able. And we focus a lot of that at boot camp, being RWA. What do I think about CPI? Yeah, I think they're going to do it for sure. The real question is, does anybody even care? I don't think so. But what do I think about it? They're going to do it. What do I think it's going to be? Irrelevant. So I don't know who he is, said basically 25. No, he said specifically 25. But 50 if high inflation. No, that's wrong. I don't know where you got that. Jerome Powell did not say, if inflation's high, I'm going to jack it up 50 basis points. That's wrong. He did not say that. So let's define this. I don't have an opinion on this. Let me show you the facts. Fed Watch Tool. Okay. There is a 97.8% chance he will not raise by 50 basis points. So I would say incorrect. So you're looking at the data incorrectly. Okay. So I don't know if you're learning and that's your interpretation, which is fine, right, Alexander? If this is your interpretation, that's fine. You're learning these things. But Alexander, if you're listening to, quote unquote, another guru, you need to stop listening to that other person because they're wrong. It doesn't make any intellectual sense at all. Powell has not said that, and that is not being priced in by smart money. So that analysis is just wrong. Cool. So again, I don't know if it's you or somebody else. I'm just saying if it's you, you're trying, and that's a good thought process, but it's not proper. If it's someone else's analysis, you need to stop listening to that person. They're not qualified. They might have, right? Yeah, just me. Yeah. The other person might have 400,000 viewers or subscribers, but they wouldn't know. Yeah, so you're looking at it wrong. Okay, we're not even interested in that anymore. The decision's already been made, so the CPI print is irrelevant. Okay, remember, we only track that data to understand the Fed's policy. We already know the Fed's policy, so now it's irrelevant. Who cares? Okay. Yeah, so it's all done. It's done. It's just like if you remember, one of the mafia movies. Joe Pesci goes in to get made, and instead they kill him. And anyways, they're telling his partner, it's done. Nothing can be done. It's done. It's done. It's just done. Nothing can be done. Okay? That's it. This is done. It's just done. It's done. Is it Goodfellas? I guess it is. I wasn't 100% sure. You guys, if you watch The Irishman, there's a scene where they're like, it is what it is. They can't say that to me. They can't do that. It is what it is. Well, if there's no, it is what it is. It is what it is. Just do it or die. No more talking. No more warnings. It just is what it is. We know you're not going to like it. You just have to do it, Jimmy Hoffa. Okay, Richard says, hey, what's going on with Kitty Cad? Well, okay, Cad week, Cad week, Cad week, Cad week, Cad week, Cad week. You are watching oil fall from 140 to 120, right? It's actually 119 now, right? Alexander, you have to read into that. What he's telling you is he can do whatever he wants. He's not painting himself into a corner. Okay, so he has to say that to say, look, I got more ammo if I need it, but he's not going to use it. Okay, yeah, so we're below 119, right? So there you go, Richard. Why CAD weak? You got to watch what CAD's selling. Oil's down, gold is down, wheat is down, nickel is down. You know, one of the things I thought we should look at, of course, I can't trade it, I don't have access to that, but how about coal? I think there's going to be a surge in demand for coal, but I just imagine it's already too late. Okay? So just think of the logic. Germany does not take natural gas and oil from Russia. Great. Where are they going to get their energy? It's not like they're just going to stop turning on their light bulbs, shutting down BMW factory, right? So where are they going to get it? Alternative energy? How long does it build a solar farm? How long does it take to put up windmills? How long does it take to build a hydroelectric dam, geothermal? Okay, how long does that take? How long does it take to build a natural gas port in the Baltic Sea? How long does it take to build a nuclear power plant? Okay. Now, the thing is, Germany has nuclear power and they're actually shutting them down. And they're going to shut them down in the middle of this. Now, I think maybe if they were smart about it, they would announce that they're going to keep them online for a few more years. It might be not politically good in Germany, but people might understand. But the other thing is what we don't know is maybe they can't do it. Like maybe there's some, you know, they're so obsolete that there is a problem. They have to turn them off. Okay? So anyways, so they can't do nuke, they can't do alternatives, they can't quickly do LNG, but how about coal? Okay, so we might be going to that. Okay, and also in the United States, I think you're going to see coal demand. I'll remind you though, I taught people at FX Bootcamp why industrial metals are going to start going up 2 weeks ago. Things like iron ore, coal, nickel, gold, copper. Dude, like 2 weeks ago, right before some of these giant spikes. Look at this. You're welcome. Look, it went from 200 to 400. You're welcome. By the way, you're welcome. and not just said that it's going to happen, but took a half an hour to explain why first, and then instead of saying coal's going to go up, tell me why, I explained the trend and then ended with, therefore, coal, gold, copper, nickel, iron ore, all these things are going to go up. Lead, palladium. GUI? Is that how you say it? Or GUI? G-U-I. Anyways, do I think it will be up or down? I think you're asking me to guess. So I'm not going to do that. I'm not interested. Okay? Okay? I'll tell you something differently. Okay? I told everybody here 6 months ago that the stock market is going to fall by 10 to 20% in the early January. And while that was happening, I was saving money to buy, saving money, saving money, saving money, saving money. Then it dropped by 15 to 20%, and I told everybody, I'm buying, I'm an allocator. I got my cash and I'm buying stuff. Now I tell you that I'm buying stuff, and I'm sharing some of the things I'm buying. But like, is the market going to go up or down today? That's for you to decide. Now, you either understand risk on or risk off, or you don't. And if you don't, you need to learn more. But I'm not going to tell you that. Okay? I feel cheapened. I feel cheapened. Sorry. I'm wearing a long skirt today. Okay? So anyways, going back, I'd rather talk about the trend. And anyway, so did I know like coal was going to double? No. But it is interesting. Somebody's thinking about it. As soon as we're talking about cutting Nord Stream 1, not just Nord Stream 2 being built, we're cutting Nord Stream 1. Well, you got to get your energy from somewhere, and that's what you see. Iron ore, okay, much more significant, or much less significant increase, but up nonetheless, okay? Chinese got a giant iron Bahia ban, so you definitely remember talking about it. Iron ore and coal mixed together gives you steel, okay? Steel's up, okay? Cool. What about wheat? Now, this is the weirdest thing, and it shows you how sort of dumb the market can be and how fearful it is. I've learned over the years, I used to think when I first started investing, I thought everybody, professional traders, were elite. Okay? I thought they were elite. I thought they were smarter than everybody. I thought they were like the titans of the industry. They were financial gods. Turns out they're very, very, very mortal. And in fact, most people in the market are not that smart. They're not that good. Now that's bold, right? But like, so I'm always surprised, like, why is wheat going to go up? And you're like, well, Ukraine produces a lot of wheat, and now there's going to be a shortage of wheat. The United States, Canada, and all of Europe buy no wheat from the Ukraine. None. Or Russia. None. Americans eating Wheaties are not consuming Russian or Ukrainian wheat. That goes to Algeria and other parts of North Africa and the Middle East, for example. So yes, prices should go up for those living in a small town in Algeria that eat wheat porridge or make bread out of it, or I don't know what they do with their, right? You know? So like this is up because we're worried about a shortage. A shortage to whom? Canada could feed half the world, just Canada. But the United States produces a lot of grain. Wheat, corn, barley, so on and so forth. Canada produces incredible amounts. But Europe produces a lot, but we also get, in the winter, we get stuff from Australia. Now, in Australia, I don't know, Australia produces a lot for Australia, but globally, okay, maybe not that big of a deal, but just Canada and the United States and Europe put together, we don't need Russia. We don't need the Ukraine. We don't consume any. Who cares? Europe produces a lot of food. Canada produces so much food, we could never consume it. We export as much as other countries need. We give as much as we can to starving people around the world, and there's still food left over in Canada. Now think about that. Canada can consume every grain that they need themselves, export every grain that anyone else in the world wants to pay money for, then give a whole bunch of it for free to starving nations around the world, and after that, there's still food left over. And that's just Canada. Holland, I was shocked at how much food they export. I had no idea. It's shocking how much food Holland exports. Then when you throw in France and Germany and so on and so forth, like, oh my God. Okay, Poland produces a lot, just, oh my God. So like, where's the shortage? Oh, well, the crops in the Ukraine are going to be destroyed. No one wants to buy Russian crops. Look, everything Russia produces is going to go to China. That's it. It's done. It's just done. Don't worry about it. It's done. Nothing you can do. It's done. It is what it is. It's done. Okay? But it won't impact anybody except China and Russia. So anyways, we went from 600 to 1200, and I don't think that actually makes any logical sense. So maybe you're out there selling the hell out of this, right? You guys remember Black Scholes? Is it Scholes? Or is it Scholes? Anyways, okay. What they did is they bet on the spread normalizing. You're like, what's a spread? If I could add another, maybe we could do like the average price of this. Okay. So you would come in and you would say sell, or maybe sell, right? Sell. And you're just selling to get back to, let's say, 400. So now you're at 1200, and you'd come in and you'd say, this is an extreme, makes no logical sense. This is bull hockey. This is road apples. Phooey or foobar. Okay? And you're just like, okay? So you got a mean, standard deviation, above and below. Okay, whatever. So you're going back to whatever the mean price is. Sell it at 1200, take it down to 1000 at a bare minimum. Second target would probably be more like that. Okay? Problem is they went out of business because they started doing this, and then what? Russia defaulted. Okay? So be careful of your counter trend trade back to normality trade, because on March 16th, Russia's going to default. Look at that, risk on. Canada's not even strong yet. This is moving. But you're like, wait, what? Say that again. Okay? Say it again, Wayne. on March 16, 2022 at 1:30 a.m. Eastern Time, Russia will default on its bond payment. I don't know why I suddenly stopped doing the caps. On its bond payments. Okay. And of course, people will tell you, you can't predict that. Oh, I know. But I just did. On its bond, did it delete? Oh, you can't do more than that? On its bond payments. No, won't do it. Okay. Mahai wants to know, what does that mean? Well, is that good for business? Okay. Russia owes you $150 million, and they tell you, we don't have $150 million. Is that good for you or bad for you? Risk on or risk off? You're like, ooh. James says the last time they defaulted was 1999. No, it was 1998. James is like, oh, well, come on, dude. Well, you know. Okay. So we've spent a lot of time the last couple of days talking about this. Here comes the plug in the day trading group. And if you understand all the plugs I'm doing, you're like, dude, maybe I should join the day trading group. Yeah, I know, right? But yeah, we've been talking about this for a long time. Yeah. But 1998, you should know that. Just boom, 98. Okay, we're already researching it. There are 2 links we provided last night to resources on researching that. One of them was by the St. Louis Fed. The other one was the Wikipedia. But the St. Louis Fed, and I printed it out and I'm reading it. It's right next to my bed, by the way. A case study on the 1998 Russian default crisis. Oh, so like, that's what I mean, James. Like, you're mostly right, but you should be a hardcore right, where you're literally reading central banking policy by the central bank, their post research and analysis, and you have it printed out and it's sitting right next to your bed. So it's not like what I'm saying. Again, I'm not beating you down like a dog, right? You're doing the exact right thing. But what I'm saying is there's a much higher level game where not only do you know it's 98, not 99, but you got central banking policy research notes printed out and it's sitting by your bed. Like, it's, you're like, the game is way up here, right? So you're on the right path, but you got to get bigger, right? Got to get even bigger. Okay. Yeah. And that's the thing. Like, you don't know until you know. Like, I always wish I had a mentor or somebody to follow, because all I want to know is what I need to do. I don't need much else. I just push me in the right direction. What am I expected to do? What's supposed to happen? And then let me go, right? Like, I just need the example. So if 20 years later I can give you the example, you can get here faster than 20 years because you're like, I got it. I know the game, like the elevated game, right? Where you're like, not only should you have a general idea of that this has happened before, but you need to be able to do hardcore research and analysis like you're at grad school at Harvard. You got to own it. You got to be the expert. You got to be able to teach, because it might be your portfolio, but it might be someone else's portfolio you're managing, and they're going to need your expertise. And you're like, oh my God, let me walk you through this. And people will look at you, James, right? Mr. Paul, and say, thank you for being an expert. You're reassuring me that you're on it. Okay. 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 So now you know. Cool. How do you get those? The link is in the description below the video. All right, so let's go back over to, well, CAD weakening here. But it's interesting because dollar seems to be even weaker. Okay, so I'm watching this setup, for example. That's my trade for later. Maybe I get that today, maybe I don't. Euro Noki. Maybe that shade. I don't want to look at that right now. Might be a distraction. Euro dollar. Okay, I already got that marked up. So I'm kind of waiting. Plan A, plan B. You know, obviously, oops. Obviously, A is the first choice. I just added that. You know what that is? Does anyone want to figure out what that is? Not the zero lag. Okay. So it's a good guesstimation. So what's the price here? Can anyone read that? I honestly can't read that. What is it? 10977, I think. 10977. Go to the hour. Well, I have to do it on a different one. Euro dollar. Let's go here. Euro dollar. And the 1 hour, 1 minute daily, the 1 hour 21 is 109.43. So I've sped it up a little bit. Or, unless I didn't read that. 109.43. I said 77, didn't I? Yeah, I said 77. It's more like 43. Anyways, yeah. So it's even a little more sensitive. I guesstimated it, but anyways, look at that. Killing it. Killing me softly with his song. All right, so I got to go. I got to go. Daddy's got to go to work now. Cool. So peace on earth. May the pips be with you. May your profits be above average. If you're in my day trading group, I'll see you at 7 p.m. If you're in my day trading group, you'll see Ryan at 2 a.m. And for everybody else, I'll see you in the morning. But again, if you join my day trading group, you get me at the New York session, me at the Asian session, Ryan at the European session. You are not alone. Alone, alone, alone.